Welcome to another episode of the PutinBot Speaks Podcast, your favorite Russian bot with the southern accent from Montana. I am pleased to be joined today by my good friend Aquiles Larrea. I always butcher his name. I don't speak Spanish, but the man tolerates me. Aquiles, how you doing?
I'm doing great. It's Achilles Larrea.
I
So
mean,
now you
y'all got
know.
right. Hey, y'all got from the horse's mouth. No, God bless you. I was trying to introduce Miss Gloria. She's a young lady who I'm doing some work for, and she's from Nigeria,
Oh,
and
wow.
I cannot pronounce her last name either. It's harder than yours. It's the redneck in me, Achilles. I can't do it.
It's a mental block.
It's it, brother. It's something. Well, I'm gonna go ahead and introduce Achilles right here. Really great guy. He is here on Rumble on the Larrea Wealth Management channel. Y'all can find him here. Uh, he is a he is a financial advisor. He is the founder and CEO of Larrea Wealth Management, and he is a frequent contributor on the Schwab Network. He's also appeared on Fox. He's been on their Fox Business Channel, and he's also the author of a new book called Wise Up with Your Money. And he's also going to be launching a podcast very soon with the same name. And it's your first time here on the pod here with me. You've been on the TMI show a slew of times. This is the first time that you've ever been here with me, and hopefully I can at least try to hold a candle up to the way that Ted and Manila do things.
I wouldn't worry about it.
Be honest with you, I never do anyway. It is what it is. So, what's going on with the stock market?
Everything. This is one
Yeah,
of these events. It's funny. We talk about it. Here you go, putting in tariffs and expecting that the market's not going to be affected. Is that delusional? I believe that there's a lot more to this than just the tariffs. The tariffs were really a catalyst. And when they announced that they were going to do 25% yesterday, the markets kind of took it in, but the real test was today. And sure enough, we were down just at the opening, we were down 2-3%, and we finished up down even more. The question you need to ask yourself, if you're the Trump administration, well, it's one day, you might say, but it's not. Could this be leading us into a recession or possibly stagflation, which is even worse than a recession? At least on the recession side, that's maybe, you're going to go 6 to 8 months tops. And a recession just doesn't come up to you on the door and knock on and say, hey, can I come in? It doesn't work that way. We could already be in one. And then the next thing 8 months later, we're out. So it could be very quickly. Stagflation is different. Stagflation is where you have stagnant wages, stagnant prices. You have all these things, a stubborn inflation lasting for years. We've seen this before. You know, the last time tariffs were introduced were by the Hoover administration. And imagine, back then they were to combat what had happened with the stock market crash, in October. And Herbert Hoover had introduced this as a way of getting more revenue. And if you ever seen the movie Ferris Bueller's Day Off, Ben Stein actually talked about the Hawley Snoot Act. All right. The Hawley Snoot was a tariff that was introduced to raise revenue for the government. And as in the movie, they said, did it work? And it absolutely didn't work. As a matter of fact, it sank the US economy into deeper depression. All right. Another thing we have to be aware of right now, and if I'm taking too much, tell me, okay? But
no, you're not.
can you imagine, right? We're talking about in another round of inflation going up. But how well thought out was this? We're not in the 1940s anymore. We're not the major producers of steel manufacturing and the like. So who really thought this out? Or was this, oh, those were the good times and let's go back to that? I think the idea was, and you can correct me if I'm wrong on this, Robbie, but the idea initially was that we were going to use this as a counter to the trade imbalances, right? I believe the
Okay.
Trump administration said that they were going to, try to get more countries to start paying their fair share, and that in turn would bring more revenue into the country. Which I question: how are you going to bring in revenue if we're paying for it? You know, it's kind of an oxymoron to me.
Sure.
You know, but this is just thinking out loud. This, the second part is, okay, so it works, all right? Are they thinking of getting rid of the IRS because it's working so well? You know, they talk about a little bit of pain. Let me tell you, with those stock market downtrends, that's not a little. That's a lot of pain. Also, we're talking about the pricing that's going on right now. Automobiles going to go up 20, 35,000. Auto parts, which are no longer made here, even by the domestic companies. They're not made here. They're made in other countries like Canada, like Mexico, and the like. So what's going to happen there? Your auto parts are going to go up in terms of pricing, and the mechanics are going to have to charge you a lot more, at least 25%. So how is that good for the economy? So at the end of the day, you have to ask yourself, why have we taken this step now? Why the economy was kind of fragile to begin with, in my opinion. Did we really need to take this step at this particular point in time? Or was this all about ego? You know, or was this
Sure.
all about going to the next level on his threats against our best trading partners? Because Canada and Mexico, we're kind of integrated with them. All right. We could have negotiated more, because negotiation and diplomacy is always a good thing. All right. If you think about it, the UN has kept us out of a major world war because of it, because of that diplomacy. But now we're talking about trade wars, and there's no troops being sent on the ground per se, you know, but now we are fighting against the world, Robbie. We're fighting against, other countries that are banning and joining together. Canada has already talked about with Europe that they want to band together and go against the United States. How many countries will join the fray? How many countries will say, enough's enough? You know, we need to keep you in check, US. We'll see what happens. Stay tuned.
No, I agree with you. And I think probably what some of the calculus is I think that an argument can be made that we've been in stagflation already for a very long time. At least here where we know where I am, out in the middle of nowhere here in Montana. I mean, wages haven't increased in arguably 5 or 6 years.
Probably more like
Inflation's
10
going up.
years.
Yeah, I mean it's bad, and
Yeah.
so I
And it's
think,
the same here outside of the cities. Absolutely.
I think that probably what the calculus is. I think it's probably two things, and I'm not a Trump supporter. I'm not going to carry water for the dude, but I think I can understand where he's trying to come from. If you're already in a stagnant economy that is just grinding people down with inflation and the cost of living and everything else, then you don't really have to worry about stagflation because you're already there. And at least this way, he can make a pitch for the unions, the union workers. This is what he's doing is very popular with, for example, the auto unions there in Detroit. They love the idea of these jobs coming back. I think it also plays well with the base. Uh, you know, bringing manufacturing, bringing those jobs back to America. Would that solve the whole problem about wages not going up? Could that be where his head is?
I think it's possibly that is correct. You know, the more popular your base is, the more you're going to get initiatives through, you know, but at what cost? Because food is already up. You're now introducing other costs. We are reducing, if you think about it, we don't have the tax base to see that a gross domestic product is going to be going down. It's around 2.5%, 2% right now. It could be going down to 1.5%. All right. We don't have the tax base that we once had. The other countries don't have it either. You know, so therein comes another problem. You know, so I'm thinking at this point, yeah, he's appealing to the base, he's appealing to the unions, but we are not the same country that we were 50 years ago, I submit. And that there are other segments that you need to pay attention to if you're going to take this tactic. And imagine we've had stagnant wages for 10 years all across the country, except in the major urban centers, you know. So that is another factor that could easily drop us into a recession, not a prolonged one, but a recession nevertheless, and also increase the prices everywhere. I mean, we see this happening across the board. What we don't see are any concrete solutions to if this goes bad. I think that diplomacy, I think that talking this out with our strategic partners might have been a better solution. Now, the argument could go, well, we've been talking to them about 20 something years. You know
Right.
what? You keep talking and you keep trying, because eventually you do something like this, you're going to annoy people and they're going to band together to go against you, like I was saying before. And that's the last thing you need right now. We need togetherness. Another thing that I've seen here, and you can stop me if you don't agree or what have you, just interrupt me. But immigration. Immigration is the lifeblood of this country. They will do the jobs that no one wants to do. They will outwork, they'll work smarter long term, and they're not taking jobs. Nobody wants to go work in the cornfields or the other fields, in agriculture. No one wants to do these jobs that barely pay minimum wage, or if not less, because they get special concessions to do that. So how can we be benefiting by reducing the immigration quotient here? Immigration has always been our superpower, because anywhere between, if you look at how much is paid in terms of taxes by immigrants, it's over $96 billion. All right.
Yeah.
So there is an incredible resource that we are now messing with. I'm
Yep.
not a fan. I think that, I'm a son of immigrants. So I personally can tell you, we had to work twice or three times the amount in order to get to where someone who was born here is. Put up with a lot of discrimination, put up with a lot of things anybody born here would never have to put up with. So that's another thing you have to remember. Gotta keep the flow of people, good people coming into the country, not just who you want, but people who are willing to tackle that tough work.
So, but doesn't immigration though? Doesn't that by its nature doesn't that depress wages? 'Cause if you're bringing people who are willing to work for lower wages, then won't that by definition depress the wages, therefore pricing out the population of that country?
That's a good argument for it, but it's not true, because if you're bringing in people who are not going to do the work that anybody else here does in the United States, what's the competition? Are they bringing down the wages that were already depressed for that type of work? No one here who was born here is going to work for $2 an hour, but
Correct. You have
these
to pay them.
people will.
Yeah, well, that's my point, right? Because if you cut off the spigot of people coming across the border who are willing to work for $2 an hour, and then have to actually start paying people, I don't know, $15 or $20 an hour to actually do the job, an actual living wage.
Do you know how
But
long produce lasts? Have you
don't
ever?
have a clue.
I'll just give you for instance. Once you start doing the harvest and what have you, it doesn't last that long. You got to get it
Yeah,
into the preferred facilities to
sure.
make it last a little bit longer. All right. And so
Okay.
not only are these people moving and getting that in, they're also exposing themselves to different types of chemicals and doing the work that nobody else is considering. That is not dropping your wages. Those wages were already set, in my opinion. So they're simply coming in and filling a role, and doing
Okay.
so on a special needed basis, because we cannot have all these agricultural products here without these people. They're already talking in the heartland, Nebraska, Wisconsin, all these states are already talking about the difficulty that they're going to have to raise prices just for the little that they're going to be able to harvest this year. So that's another price pressure on foodstuffs, and we're already having problems with that in the grocery in the supermarkets right
Sure.
now.
Then how will that factor with automation? For example, in China, for example, there's what they've started doing is they're actually using robots now. I don't know if you've seen these or not. They're pretty
I've
freaking
seen them.
wild, and they just go through and they just harvest like absolutely crazy. And so one of the arguments that you're having is that, and I mean, you already see it in the stores, everything else, is that automation is going to eliminate, or if not eliminate, then at least greatly reduce these jobs, these entry level jobs, these unskilled jobs. And so I think that kind of reduces the need to have all those people, doesn't it?
Yes, and at the same time, there should be some sort of strategy or programs conceived by the government, put in place to say, hey, you know what? We see the writing on the wall. These people are not going to be here within 10 years. So, what can we do to up the skill of these workers, whether they're immigrants or not? They're going to, let's take care of our people first, obviously.
Yep.
How can we get them more skilled up beyond the robot coming to take my job? And I think that's very important. That person is going to have to be trained. That person is going to have to get a small window to do the new job that they're going to have to go into. But there is opportunities, and anybody who says that there's not, you know it's just you're in a different area of the country where it has not been built yet. All right, but that
Okay.
could very well be next.
So I'm going to promote you right now. Instead of being the CEO of Larrea Wealth, I'm now going to make you the second. I'm going to put you in charge of you. You pick. I'm going to make you Fed chairman, or I'm going to make you the President Trump's chief of staff. You want which job you want? If you had to pick
Let's do
one,
the Fed,
okay, let's do the Fed. Sounds
because you
good.
can't fire me.
That works. You're independent. So I'm going to come to you. I'm going to say, Mr. Larrea, the middle of the country is dying on the vine. You have millions of people who are either out of work or underemployed, and you have, I don't know, 6 or 7 major areas that's driving the economy of the country, and everything else is just this giant sucking hole with depressed wages and everything else. How do you fix it? How do you fix Montana? How do you fix Wyoming? How do you fix Nebraska? How do you fix those small towns? How do you get them an actual viable economy?
I don't think you can fix in the traditional sense that you're thinking, all right? And the Fed's mandate is to control inflation and to protect against unemployment, to form it from being out of control. How
Sure.
difficult would it be to take a program, right? And this is more for an administration, but how difficult would it be to conceive a program that could retrain our workers, go into sectors and areas, whether it be Ohio, whether it be Nebraska, whether it be Wyoming, and say, hey, you know what? We have skills that need to be developed here. We have a potential job force that needs to be developed here, but it's going to take us some time to do so. Do some paid training. It wasn't too dissimilar if you think about the New Deal that occurred with FDR. All right. There were skill sets that people didn't have. They were coming from the farms. And all of
Sure.
a sudden, they were fixing roadways. They were doing all these different things. We need that kind of thinking right now. And in absence of that thinking, we'll continue to do the same thing over and over. I think we need some new heads to come in, form somewhat of a blue ribbon panel committee of from all the different sectors, say, and asking them outright, what areas do we need help the most at this particular point, and what areas actually have the biggest potential to bring in people and be able to start from, say, a 3-month work period, but be paid a nominal wage, learning that new skill, and then being deployed in the areas we just talked about. That could be one possible solution. Another possible solution is to encourage the companies that we're talking about who have that need to come in, step in and say, okay, well, we need have this need, and we need, 1,000 new, skilled workers in our particular company in a particular area and move that forward, because that's another thing. Essentially saying the same thing, but one could be public sector and the other could be the private sector. And that could get the wheels start turning again for people to start making money again. The more money people make, the more they spend. The more they spend, the more businesses will add to the bottom line. The more bottom
Okay.
line that they have, so on and so forth.
Do you think that GPD, or GDP, the way that we've traditionally thought about it, needs to change? Because I think that probably where we could be going, and correct me on this. I mean, you're the economist. You're the economist. I'm not. Do you see a future with automation, with technology, that labor becomes less important than it's ever been before? For example, truck driving. With the advent of self-driving vehicles, are you still going to need those long haul truck drivers? Are you still going to need road crews to go and fix potholes if you can eventually automate all of those jobs away? I mean,
That's a good question. I actually don't know the answer to that. I think that, once again, if you look back when the Industrial Revolution was taking place, right, as computers came along, people retrained themselves to understand computers more. AI has come in and said, well, I'm going to do this, I'm going to take this over, and what have you.
yeah,
It's not 100%. We're still a couple of decades away from that being the norm.
right.
But you have plenty of time. If you're in those areas, you got to say to yourself, am I going to stay here? Or do I need to look for something that is compatible with my skill set and take some training in that area? Like I said, this is not an easy answer, but you must start thinking about that if you are in those areas. I mean, they've been telling me that financial advisors were going the way of the dodo 30 years ago. You
You're
know,
still here.
we're still here. You know why? People like to talk to us. People want to get good advice, and
Sure.
people are willing to, at the end of the day, people are willing, and this is contrary to what all the discount houses have said. And they, like Chuck Schwab, they said back in the day, you're no longer going to need a broker. With a advisor, you do anywhere between 5 and 8% better with them, because they are not as emotional with your money as, per se, just an algorithm. Or
Sure.
there's no one thing that's going to put someone who has the skill out of work. But if anything, that person is going to have the wherewithal to see the writing on the wall and say, okay, you know what? I'm going to try something else. I want to feed my family. I don't want to have to worry about the day-to-day layoffs that are going to occur eventually. What can I do that I'm really, do you have people skills? Do you have can you organize the data that's out there into something? Can you get the training to do something like that? Anything beyond just doing nothing, because we
Sure.
know what happens when you do nothing.
Do you see a point where eventually that there will be some kind of a UBI that's introduced? Like, will no, how you're talking about how go find something else that you're able to do, kind of retool yourself as technology, as AI, as these things happen. So I say 20 years from now, when my son is 30, wouldn't that mean that the pool of employment would be such that you have so many people out of work that just because the job simply no longer exists, it's all been automated away. And
I
then if
think
you're
for
going
the
to,
older generation, it's more of a problem than the younger generation. I mean, my son is 21 years old, and he's graduating college this semester,
gotcha,
and his knowledge, his skill set is way beyond mine could ever be in the computer set. Let's put it this way: he could write the programs that implement these changes, and that's one area that you need to think about.
sure,
On the social side, I look at my daughter, she's in high school. That skill set for social, beyond the social media, is also another possibility. A better way, a more efficient way of doing things socially, that could be on the horizon. And or to simply teach the robots a certain amount of socialization, so that way we can defend ourselves in the future, just having jobs, but having them in strategic places that still keep you relevant. That's what I see going forward in the future.
Gotcha. What advice would you give to a small cap investor, like a retail investors on Robinhood, or someone just likes to just dabble in the stock market? No, they're looking. No, they're looking at the market. They're seeing all the red. They're seeing all the blood. They're seeing all the people just running away. I look at it. I see it as an opportunity. Am I foolish for that, or do you? Or what advice would you give to the little guy, the small retail investor? Is this a buying opportunity? Hold your powder, or run with the rest of the lemmings off the cliff?
You know what? Here's that's great. Good question. So the first thing that I would do is take a deep breath. Let's do it together. How you feeling, Robbie? One
Hey,
more
that
time.
mountain air is great. It's snowing outside right now, so we got that nice, crisp, snowy mountain air. It's great.
Is it powder?
It is.
There you go. You're going to be able to ski
Yep.
in April. That's beautiful.
Hey,
And I'm
it
not a
snowed.
skier.
Hey, it snowed last May here. I mean, it snowed. I've seen snow in June. It's not. It's winter till Montana says it's not. That's just the
Right.
fact.
It's funny. They said in the other, we were talking about Yellowstone, and in the show related to it, the prequel 1923,
Yep.
one of the characters, Spencer, the nephew of Harrison Ford, is trying to get home. And he says, well, in Montana, there are only 3 seasons. He
Yeah,
said June, the summer, and then the winter.
that's
Basically, he
true.
named the months of the summer and then the winter, and that's it.
Yep.
There's no other. And I've been to places in Europe. It's exactly the same thing where they start getting real cold weather in September.
Yep.
From
So we're here.
September till about May over there, and some places June, of course, if you're in a mountainous area, of course. So going back, what was the question again?
Oh, but the question was just if you're a small retail investor, if you're just a little
Gotcha.
fish, just trying to you're dabbling in, just trying to just trying to figure things out. Um, you see all the red, you see the stock market bleeding, you see the so-called smart money running away.
Gotcha. I
What do you
gotcha.
do?
Okay. So what are we gonna do? Right. First thing, we took our breath. Right. The second thing we need to do is how can we pick up some good companies that pay good dividends at a decent price? All right. Today actually wasn't the first day of the bloodletting. Okay. We've got red in the water. We've got the sharks swimming,
Yep.
going after all the fish. All right. We should be thinking, someone said to me, it's Black Friday for stocks. And I said, not yet,
Mm-mm.
because I want you to also think last year we made on average, the S&P did over 28%. Okay. So there has not been a serious correction in that time. I went on another network and I said we were going to have a correction through the first quarter. And sure enough, it's happening right now. A real correction. None of this, it bounces back 2 days later stuff. All right. So
Right.
we're going to have a prolonged correction. Once you can kind of sense, I mean, not the average person can sense this, but what I sense when I know it's going to turn around is that the downtrend slows. And once it starts to slow, you look around and you say, how is everybody in their sector doing? The competition.
Sure.
If they're all starting to slow down, because they tend to be correlated, right? If they're all starting to be correlated, then I say to myself, time to pick up a bargain. But I'm going to be really judicious about it. I'm going to go pick up one name, and then I'll wait. If there's more bundling, I'll pick it up again. If it goes up, I'll pick it up again. You only have a certain amount of capital. So once again, strategic, judicious, simple. All right. Moving forward, say to yourself, is this at a level that, hey, I can pick up 10 shares, or hey, I can pick up, a little bit more, or I have a 401k. Hey, instead of 10% this pay period, I'm going to do 13%, or I'm going to do 12%.
You have to buy the
You,
dip.
yeah, yeah, it's just another way of getting in there. we're heading towards tax time. All right. If you have the capital available, put some more money in your IRA. All right. It's a great way to get deduction and put some more money in the market after that's already in there. Okay. So that's another way. If you're living paycheck to paycheck, which a lot of people, what do they say, about 80% of the people are living paycheck to paycheck right now.
Yeah.
All right. If you're living paycheck to paycheck, do you really need to go out at that particular day, okay, with your colleagues? Do you really need to go with family? Now, it doesn't mean not to have a good time, but once or twice a month, Robbie, you can easily cut back just that amount, but make sure you're religious by doing it.
Right.
I'm going to cut this particular day. That dinner normally costs $50 or $60 for a family of four. All right. And I'm being actually, that's actually kind of on the low side because
Yeah,
here in
there
New
in
York
New
it's a
York,
lot
for
more.
sure.
So I'm gonna take that $60. I'm gonna do one of two things. I'm gonna put it into an IRA.
Okay.
But if you wait for you to do it, it's not gonna work. If you have some sort of automatic thing where $60 a pop is 120 a month, right? You automatically debit that out from your bank account or whatever account you're going to use it from and put that into your IRA or 401k. All right.
Okay.
But you have to make that decision. Calculate. Remember, both ways you're going to save on taxes, whether it be 401k, whether it be IRA. Now, the second thing I would ask you, because a lot of people don't want to admit it, but they're still going to Starbucks. They're still going to Dunkin' Donuts.
Sure.
Dunkin' Donuts is the cheap Starbucks. So that's another thing. I make coffee at home too you
Yep.
know and I don't have to. It's just I like my coffee a certain way.
Sure.
So I go to the supermarket, I get that stuff grinded, I take it home and I make it like an espresso. I don't know if you've seen those little espresso things on the stovetop. They're all metal, right?
Yeah.
So you just put it in
The little
and you
frother
got
thing.
well, it's not a milk frother. It's just to make the espresso part, the coffee part, right?
Oh, gotcha.
Very, very popularized in Europe. Very popular in outside of the United States. It actually makes the coffee a lot stronger, all right, and it tastes really good. If you
Gotcha.
like Starbucks, use that blonde, the softer or the weaker coffee, I call it, because in that the way that they do it for their espresso it's the same thing. You're actually getting a strong, decent, half strong espresso. And if you look on YouTube how to make something called a cortado, right?
Right.
Cortado is just like a little thing. It's very popular in Miami. Very comes from Cuba, but it was really developed more here. And every time I go to Miami, I have one of those, even though I don't like caffeinated coffee. But you know what? It's delicious. The point being is that adjustments. You see those bats they're using the MLB right now. The
Yeah.
ones, what are they calling those?
Those little yeah,
What
little
are they called?
torpedo bats.
Yeah. Now you see what the Yankees are doing with that, right?
Yeah, they're killing them.
There's no law against doing that. Now all the other teams are catching on, right? But think about it. If you're in a slump, an adjustment, you don't throw away your batting technique because that's what got you to the major leagues in the first place, right?
Sure.
You simply make the adjustment and then go get yourself one of those bats.
Gotcha. So, along that line of reason here, I know that your specialty is Wall Street, but I'm going to drag you over here to Main Street. So, whoever's listening to this right now, I'm sure one of the common questions that you have, or that a lot of people have, hell, I've been there more times than I can count. I'm very fortunate to be able to call you a friend. Does it make more sense to pay down your debt, like your high interest credit cards, or start building up a savings account in case of emergencies, like an emergency fund? Should you build your emergency fund first, then pay off the credit card, or pay off the credit card and then build the savings?
How about both? All right. And I'll
Okay.
explain. All right. Let's say you've put aside $100, right, to do this. Why not take 20 and 20 to both things. Now, Dave Ramsey, a guy, another financial guy, he talks about being debt free. That's the first thing you want to do. But what you'll get discouraged if you're not able to do that. He has all these things that he does. You'll get discouraged very quickly. We Americans have a very limited uh, attention span when it comes to these things. So, what I would say is you want to do both because that way the progress can be measured. I've talked to several people about the 6 month fund, and you can do that very easily if you cut out the things that you don't realize cost you $5, $6 every day. All right. Once you have that emergency fund available, life changes for you because you're not so worried about yeah, you're still putting towards the debt, but you're not so worried about, do I have enough in case of the rainy day?
Right.
Right. And when it rains, it pours. Okay.
Yep.
It seems like it happens one after the other. So, Main Street, you need to listen to this. Half, a quarter, a third, whatever it is that you need to do, by all means, do it. It's gonna hurt. But guess what? You'll get used to it. And then you'll move on from it. I'll give you for instance, I haven't touched, certain food in 8 years because I wanted to become healthier, right? Can I tell you it sucked at first? For a
I bet.
month, I was dying, all right? I was like, I'm going back. And then, no. After the month, I didn't miss it anymore.
So,
So
are you still doing karate?
I am, but in the park. I every morning if I can, I try to get out there. The weather's been really bad here lately. We had a lot of rain. We're changing seasons, so I can't really go. I don't want to slip and fall, But I'm always doing something, whether it be
Sure.
weights in the house, karate in the house at like 4:35 in the morning. So a little crazy there, but uh, your muscle atrophy is the worst enemy of your muscle, meaning not using it. All right. Your head, you need to be reading every night. I read every single night. Yeah, I watch videos on YouTube and TikTok, but every single night I make sure I buckle down and I read something that's different about the market. But I don't read financial books, believe it or not, as much. I like to read articles from thought leaders in our industry, and I like to read fiction and nonfiction stories that, are different. So that's another thing.
Gotcha. Well, speaking of reading, I'm going to go ahead and plug your book here. Achilles right here. This is a new book that he has coming out. Y'all can get it on Amazon. You can also get it on Apple. It's called Wise Up with Your Money. And Achilles, he was kind enough. He sent me a copy of it. And I will tell y'all right now, it is a great book. I've almost finished it.
Thanks so
Highly
much.
recommend. Well, it's true. I mean, I grew up, dirt floor poor with a little, redneck family out in the piney woods of Florida. I didn't know how to use money. I didn't know what it was. It's just one of those things that you needed it, but you know how to use it. And I mean, I tell y'all right now, this book is awesome. Achilles is not paying me a dime, by the way, to promote this book. I'm doing it because I'm reading it. I like it. I believe in it. It's a great book.
I appreciate that. And I agree with you. There's plenty of opportunity in that book, to be a millionaire, to make $1 million. But it's, I'm going to tell you, it's going to take you 20 to 30 years to do so if you're young. Right?
Right.
The older you are, believe it, the faster you can accumulate more wealth because you have avoided the pitfalls. If someone were to tell me I'm going to be broke tomorrow and I needed to come up with $1 million and do so in 10 years, I could do it faster in 10 years than I did from when I was 20 and on, So that's another advantage into this book. The book also really makes things simple. I don't know if you agree with that statement, but
I
I
do.
think the mistake I made in the first book, Your Money and You, was that it was really geared towards the Latino community, but it was too technical. I went too technical on all the terms, and it was a mistake. And I freely admit it. There's some good nuggets in there, but not like this book where, I had 3 years to rectify those mistakes. And, this book is a reflection of how you can make money for yourself, do so in a smart, strategic way, and make money for you and your family, protect yourselves in any environment, and move forward with your head up.
Gotcha. I agree with all of that. And I know we're starting to run out of time. Just a couple of more quick questions for you if you just have a couple more minutes. One, how you talk about, we were talking earlier about the savings account, and just trying to build up some kind of a nest egg. Most savings accounts, they pay very, very little interest. And so what I've done is I've found just a higher yield savings account online. But a lot of people though, and again, I'm right there, I'm right there with them, uh, started just investing in the stock market. In your opinion, when it comes to, if all you're doing is just looking at savings, just getting a return, on the dollars that you're putting in, are you typically better off in a savings account, or are you better off with a proven company with a stock that pays a dividend?
So let me ask you, even before you ask this question,
Okay,
do you have those 6 months set aside? Not you personally, just
right.
in general. Are you asking me from that point of
Yes.
view?
After you have the
Okay.
6 months, so you have your emergency fund put together. So if you lose your job, your car breaks down, your landlord kicks your dog, whatever whatever it may be, you have your 6 months. You got your emergency fund, but you're still budgeting for that money going out, that $50, $100, whatever it is a month. Are you better off at that point still putting it into a savings account, or are you better off going into the stock market?
I think if you're going to go into the market, you have to find either an exchange traded fund, or a mutual fund that goes the way the market goes. I'm not advocating index funds. I'm advocating a fund that has a very decent return over a long period of time, but you don't have to put all your money into that. You have to
Right.
remember this stuff is still liquid. You're going to be able to get your money in a day. But at the same time, you should be thinking of that money that you're going to put into the market on a 5 to 7 year basis. That's more than one market cycle, right? And you can make some money that way. You also want to be aware of what's the overall dividend of the fund, because if it's negative zero point 0.1 or if it's 2% or whatever, then you're better off in the bank. But
Gotcha.
remember, inflation's watching. The idea is not to get a dividend. The idea is to get growth. Perfect example, right? Let's just say one particular stock earned 14% last year, right? And that particular
And that means
stock
share
maybe
price, like the value of the share went up by 14% over the year.
correct.
Okay.
And that's not all part of the return. The second part of the return is that it paid you a dividend 6 to 7%. What is your total return? Your total return is going to be 21%. Okay.
Okay.
21% is a pretty good return. Now let's take the flip side. Market sucks. It's
Yeah.
stagnant. We're not doing anything. It's still paying 7%. It's still paying 6%. And I have my clients in these type of stocks as well. We have high octane, but we have dividend aristocrats, they call them. We have, you want to avoid the foreign thing right now. So, your Nestle's of the world or what have you. Yeah, they pay a dividend, but you're paying 31% tax on that. And to get that back, it's just crazy the way they've set it up in the tax code system right now. So you want some domestic companies that pay a high dividend, but also have the growth principle already worked in, that they have been growing at 8 to 9% plus per annum for 100 years, so
Right.
that kind of thing. Or that their CEO is being aggressively buying back the shares to enhance shareholder value, right? That's just a fancy way of saying, I'm going to put money back into my particular company so that way it's worth more money. And that's called enhancing shareholder value.
Gotcha. And last question for you. That we kind of started the podcast talking about Trump and the trade war and everything else that he's doing. Would it have been more impactful for the economy, both for Wall Street and Main Street, if instead of going out and picking a trade war over, and I don't necessarily trying to protect the American industry is dead. It seems like to me he would have been better off instead of starting a trade war. He would have been better off by going to war with the tax code and simplifying it.
You
Would
know,
that have been a better use of political capital to fix the tax system, to incentivize that way people are keeping more money in their pockets and not spending so much in taxes?
yeah, that's an interesting idea. But I think that this was no surprise. I want you to think about it. His first term, who did he pick a fight with first? China.
Yeah.
Yeah. What result was gained from that?
Oh, we lost our shirts. I
Didn't
mean,
really
I
work.
no my
So why are we surprised that this is going on?
well,
Are
I
you
think
that ignorant to think that using the same thing that you did, oh, it's going to be different this time?
it's
Why
not.
is it going to be different? It's not going to be different because the conditions have not changed. If the conditions don't change, if we don't approach this a logical manner, right, and talk to these countries with respect and with an idea, hey, we're doing this, work with us on this. We don't expect a 50% tariff, all right? But
Right.
what if we could start with 5% and then go up to 10% for a limited time? Put a defined thing on it. Now, you say from the flip side, you'll say, well, then they're not going to want to do anything. It's like, but you're still talking. You might get, say you want 10%, you might get 3%, but that's sure better than zero. And that's sure better than a trade war. Trade wars are not good. Didn't you see Star Wars? Even though it was bad, there was a trade war that happened
Yeah,
there.
that was
You
horrible.
know, that's how you got Darth Vader.
Yep. Well, I mean, me personally, I think the reason why they're doing also China is because the powers that be in Washington D.C. want a war with China, not a trade war. I think they want a shooting war with China because it's a peer competitor, it's a strong nation, it's getting stronger, and I think that the powers that be in D.C. just they cannot abide the idea of another nation being a rival, and so I think that's probably what they're trying to do.
It's not dissimilar. I mean, if you think about it, the British were our rivals for many time. I mean, we were the petulant brother, to England, just
Sure.
like Spain, Spain was and France was during the time of Revolutionary War and thereafter. And it still took us about, I want to say, 40 to 60 years to really develop into that industrial powerhouse. We didn't do that through cotton.
No,
We did that through the industrial machine that we had. So why do we think that anything different is going to happen here, Robbie? We are going to come up with these ideas and not achieve the results that we want, but go into an area that we shouldn't be. We should be trying to focus on our thing right now, but not at the expense of trade wars, immigrants, things that made this country great, which is not the protectionist stuff, not the isolationist stuff. It's really coming together as a society, working our butts off and showing the resilience that the American people have, that we go beyond just the thing that we know, that we go into areas that we never thought we could and build up the economy doing that instead of just trying to get the buck from someone else.
sure.
Just my opinion.
No, I agree with you. I mean, I think that what it is, I don't think that I don't think the DC has an idea about how to fix Main Street. To be honest with you, I don't think that they care about it. I don't think they want to fix it. I don't
And
think
they're
it's a
not in
priority for
touch.
them.
They're
No,
not in touch with Main Street.
no,
Absolutely
none at
not.
all. No, none at all. And so I think what they're doing is just you got to vent that anger and that frustration somewhere, and the other person is always that's the best target, right? Those people over there, they're screwing you. Those people over there, they're the ones that are hurting you.
Yeah.
I disagree with you on immigration. That's okay. I mean, we're allowed to. I mean, we can still be friends and disagree. It's a great thing.
Debate is the strongest way to present your ideas out there.
100%.
And if you don't present your side of the story, nobody's going to know. And if nobody's going to know, then the other side wins by default.
100%. So tell us a little bit about your podcast that you're going to be launching here on Rumble.
Yeah, well, I think that there's too much jargon, mumbo jumbo when it comes to talking about the financial topics of the day. So we're going to be on top of that. We're going to be talking about some ideas. We're also going to be doing this in English and Spanish without
Yep.
giving everything away. We want to make it interesting to our viewers. We want to see that they have a side, on the financial side that, yeah, you can have a voice in that. A lot of people think that they can't do anything about the corporations. Absolutely not true. You can actually make an impact. You know that in every country, if you go outside the United States, demonstrations actually work in
Yeah.
those countries. You know,
I remember you
why
telling,
not here?
I remember you
People are
talking to Manila Chan.
apathetic.
Yeah, I remember you talking about talking to Manila Chan about the POTS protests down in Central America. Yeah,
Yeah.
100%, right there with you.
Yeah. So there's a possible solution. Another thing, I would take consideration with this podcast is that we're not going to talk down to you. We want you to understand what we're talking about. And we're going to poke fun at the financial community. And they may not like it, but that's okay. You know what? I'll make fun of myself if you don't like that. And I'm allowed to because it's
Yep.
me.
Yeah, right there with you, my friend. And do you know what day of the week that you're going to be doing the podcast on?
Yeah, I believe we're going to do it on Friday and get it out as soon as we can from that point. We think that it's going to be instrumental to changing people's mind about money. It's called Wise Up with Your Money, like the book,
Yep.
the Wise Up with Your Money podcast. I also believe that if you give it a chance, right, you're going to pick up some investing techniques by default, but we're going to pick it up also by design. And that way you can become a smarter investor and really start thinking logically instead of emotionally. Everybody loses their shirt, Robbie, because they think emotionally when it comes to stocks. Right.
Yeah.
Well, buy high and sell low, we call it.
Oh yeah.
Now that's but that's the kind of thinking that puts you in contra of your audience. No, you got to think, hey, you know what? If I buy this high quality thing, and I'll answer questions about stock, I'm not afraid to, but it may not be for you. You
Sure.
know, only through a qualified conversation with a good advisor can you draw a conclusion when they know all about you. I spend on average an hour to an hour 10 minutes with my clients every time we talk, and it's not something that I've ever regretted doing. It takes a lot of my time, but they also get the benefit of my expertise, the personalization, the customization, and how are we doing versus our goals. So in my wealth management firm, the last thing I ever want is someone to say, hey, that guy, I didn't know what the heck he was talking about. And why
Right.
did I sit down and take an hour of my time for this? No, you should be enjoying yourself. You should be talking about life. We might do that on the podcast. Hey, let's talk about things that are not financial too. Let's have some laughs.
Yeah. I cannot agree with you more. I'm all about it. Well, y'all, on that note, and here's his website. It is, let me see, it is larreawealth.com. He's also here on Rumble. Y'all can find Achilles. He's here on Rumble. He's on X. He's on YouTube. Basically, the guy is everywhere. And I'm telling y'all right now, he's a good guy. I'm glad to call him a friend. Achilles, I want to thank you so very
I'm
much for
not
coming on the
admitting
show
that.
today. Well, the cat's out of the bag. I'm sorry. Your friends of the redneck hick in Montana. It is what it is. You've already let them know.
My honor and my pleasure.
All right, my friend. Well, you have yourself a good one, and I'll talk to you. I'll talk to you again soon, I'm sure.
Thanks, Robbie. Appreciate
All
it.
right, my friend. Yeah, you have a
Take
good
care.
one. Bye bye.